Good morning, everyone. Welcome to Construction Technology Podcast. I'm here with Mike from Build Vision, Andrew from Join, myself, Luigi from Provision, and we have a special guest. Welcome, Guido from AEC Foundry. Good afternoon, Guido. I know you're based in Italy. How are you? What's going on? How was the week?
Hey guys, thanks for having me. Great week. Happy it's Friday. Sitting here in Rome, Italy. Decent weather outside, so definitely going to go and enjoy some of that after we finish this. We finish.
I bet. Does Rome shut down on Easter Friday, on Good Friday?
Yeah, not today. No, not on Friday, but Easter Sunday and Monday.
Well, appreciate you joining regardless. So, Guido, maybe you can just tee up the audience about AEC Foundry, what you do that's a little bit differently than most technology companies in the space, and then we can just dive into it.
Yeah, so AEC Foundry, we partner with AEC enterprises to, I guess the tagline is to turn fragmented knowledge and data into scalable. And we do this through platform-driven, data-first, and AI-native delivery model. What makes us different in this space, I think the key things that we sort of highlight is that we're not a consultancy in terms of we don't just deliver strategy and slide decks. We don't do strategy without outcomes. We build custom solutions, but we're not a dev shop. So we push back a lot on requirements and we try to embed ourselves within our clients' teams and workflows as much as possible to understand how they're actually working. So we don't build software on request, and we're not a sort of an agency type. So we're really long-term tech partners. The relationships we have with clients are, 18 to 24 months typically, if not longer. They keep coming back, different departments. So we try to really get in the organization and try and embed ourselves as much as possible and as close as possible to the domain knowledge.
I see. AEC Foundry. Did you draw any inspiration from Palantir's Foundry? Should we think about it the same way? It's like the ontology layer that you plug in. That's kind of
Yeah,
like
no,
the technological layer. Yeah, tell us a little more about that.
yeah. So no, the name, I mean, Palantir came up with Foundry, I think a very long time ago, maybe 2015, 2016, somewhere around there. Could be earlier, not sure. But no, there's no link to the name. There's no link to the name with Microsoft Foundry either. Admittedly, they picked that after us. So if there is a sequence, it would be like Palantir, then us, then Microsoft in terms of the naming.
Yeah, Microsoft copied
But
you,
yes, there
obviously.
are.
They have deep pockets if you can get like a trademark claim going against them.
Yeah, they'll pay 50K a
Yeah,
month for that.
I
Okay.
can trademark it in
Yeah, exactly.
Australia or something.
Mike, I know you had a couple of questions regarding models and where the industry is currently, where it's going. I'll pass it over to you.
Yeah, for sure. Yeah, Guido, thanks for taking some time to chat. How are you thinking about foundational models? Are you building on top of foundational models? Are you building your own models? Would love to kind of just have you unpack that. Being an open book, we're spending like $15,000 a month currently through Gemini. So obviously that's a huge API cost. Would love to get your thoughts on like just how you're thinking about the cost per token and what technology you're leveraging.
Yeah. So we're completely model agnostic in terms of how we integrate these models within our platform and then offer those capabilities to clients. We deploy infrastructure for clients, so they own the infrastructure, and we purposefully designed our infrastructure to be vendor agnostic so that you can sort of stay ahead of the curve and keep pace with the technology that's changing pretty much every day. So in terms of like model selection, it's often comes down to, at least with enterprise clients, it often comes down to the IT contracts they already have. So, if they're with Microsoft, they'll naturally gravitate towards OpenAI or whatever models are available in the model catalog within Azure Foundry. If they're with Google, then of course they'll make as much use as possible of the Gemini models. And the reason for that is that enterprise clients have contracts with these companies and model providers that give them millions of dollars in free credits. So it's in their best interest to then leverage all those services that they pretty much get for free.
Can I
So
ask
when
you
you say like, okay, go ahead, Andrew.
sorry, just like how that change cycle works? Sorry to interrupt, Mike. Like, how often do your partners and clients like change foundational model that they're working with, and like who drives that? Because like there's a new foundational model that might be better at something every few weeks or months, it feels like, and I'm just curious. Yeah.
Yeah. So the reality of AI in enterprise and in companies that do it well, like if we take fintech or large banks or large tech companies, if you go and look at like the AI they've developed, they've obviously been on the bandwagon from earlier than anyone else, right? And they've been building internal tools and systems based on the models they had access to at the time. And you'd be surprised how many of these systems today are still in production with models that everyone thinks, oh, they're obsolete. Like, embedding models that were the first embedding models, or like language models that have been surpassed by 6 versions. The old ones are still in production and they're still doing what they need to do. The difference is that companies that do this properly, and how AI is implemented properly within the AI industry itself, is that you always start with benchmarking, right? And this is probably where the conversation is going to go, but you always start with benchmarking and evaluations. So if you don't have like a way to quantitatively or at least qualitatively measure the outputs of an agentic workflow against your data and what your expected outcomes are, you have absolutely no way to tell whether a smaller, cheaper model would perform equally well, or in a sort of counterintuitive way, if the newest version of the latest model performs worse. And that happens all the time, because if you set up an agentic workflow and certain prompt engineering for a specific version of the model, often the way they train the models changes, they improve, but the prompting structure, for example, changes for new families of models. And then your whole pipeline, which was amazing on like GPT-4, GPT 5.2 comes out, all the benchmarks say this is the best model in the world, everybody switches. They're like, oh, just switch it to 5.2, just keep switching to the best. But the performance isn't guaranteed. You might be degrading performance. And without benchmarking and evaluations, and particularly when you're doing it within an industrial domain, without expert evaluations and benchmarking that are driven by subject matter experts and domain experts, there's no real way to tell when you're going to switch if it's better or worse. It just becomes intuitive. It's like some people...
So the like IT org is responsible for sort of like picking the foundational models they're going to work with. They're leaning on their existing contracts. Often there's a financial reason there. And in order to guide like the decisions going forward, they will have to get good at running benchmarks on the like domain system. It's not just like, all right, like we're going to upgrade Postgres from 15 to 17 because read latency goes down. They have to have like domain benchmarks and the skills to be able to like collect the data and run them and evaluate them. And they have to do this periodically and pay attention to it if they want to keep the model. Okay. That's a lot of work.
It is. And I think one of the key things that we talk about and one of the key challenges in this industry is in exactly what you said. Like, it's the IT team, and it shouldn't be the IT team. It should be a dedicated AI team or external consultants like us, of course, that can help with expertise that's just missing in these organizations. But by treating AI as simply another API that we can call in a software stack, they're kind of missing out on all of the complexities and nuances that IT teams just don't understand.
How do these like AE firms manage quality? Like quality of deals. Like my background in software engineering, we work mostly with general contractors. When you're delivering software, as you know, right, you tend to have like someone, there tends to be someone who is responsible, or there's a responsibility, sometimes it gets folded into under parts of the organization, to keep an eye on what's going out and make sure that we don't accidentally break anything and that things work. There's all sorts of automation you apply around it, but there's like an organizational unit that does that and is assessing our work product as close to what the customer will consume. Like how do AE firms do that, and is that the place that would be best suited to like judge the quality of these agentic workflows and benchmark them as they iterate and evolve?
I mean, it depends if you're talking specifically about quality review within architecture and engineering is very much focused on the review of technical drawings. And that's typically just funneled up. Like, typically the way it works is that you have a bunch of juniors that don't really know what they're doing, and they produce a very big volume of technical documentation for projects. All of this stuff gets funneled to a senior, like engineer or a senior architect, who does know what they're doing, and they just spend like most of their time just going through drawings and reviewing. And the thing the industry wants the most out of AI at the moment, or at least the request that we get all the time, is please automate QAQC and compliance.
It's interesting.
Because
So it's not automate the juniors, it's automate the QA.
yeah, we always flip that question around. We always say, why not, instead of trying to build AI to try and flag the mistakes you're making, why don't you try and embed AI upstream so that you prevent mistakes altogether, or at least you reduce the number of mistakes? It's an interesting conversation. I think they just have so much turnover in the base of the company. Right? They hire and fire people so much based on project volume that the retention of those skills and even working with certain types of tools, that becomes hard in these companies because they're trying to teach juniors that leave all the time.
Guido, if I can just jump in, what do you think is happening in the industry? Like, I see services being bifurcated, products, services. On services, we see people being very diligent, or at least want to understand accuracy. They want to understand F1, recall, precision. On products, it seems like no one really cares, and it's mostly vibes. We're guilty of this as well, but every product that we've put into the market, we get asked the question on these calls, what is your accuracy? And we'll walk them through the F1. We're going to be a lot more open about that in the future. Mike's done a really good job being transparent about where they are with accuracy. But why do you think there's this bifurcation and when people start to care about accuracy?
I think people start to care about accuracy now because we've gone through this initial hype of like AI can do everything, it can solve anything, any problem, there's no problem it can't solve. And then people try to actually use it within domain-specific settings, and there was a lot of disappointment, the trough of disillusionment or whatever part of the hype cycle, right? But I think now people are getting serious and they're like, okay, if you're saying AI can do this, I need it to do that within this threshold of accuracy. Otherwise, there's no ROI for me. So for example, in QAQC, if the typical question is, the typical expectation is 100%, right? It's like either it does 100% or it's not very useful. And that's like a wrong framing for a number of reasons. But anyway, the question usually is, if it's not doing like at least 90% of the work, and I can trust that it does 90% of the work automatically, there's no point to any AI-assisted QAQC workflow, because if it's below 90, you stop trusting any of the results, and then you have to QAQC everything anyway. And that's the biggest challenge, I think, now is building user experiences and interfaces and workflows that build trust in AI, not as a compromise to its inaccuracy, but as part of the agentic workflows. I think it's an ingredient that just has to be part of it. The transparency layer and understanding how the AI has come to a certain conclusion, where it went wrong, why it went wrong. I think that all of those layers are kind of in the back end and obscured at the moment in most products. I think exposing those and giving people the opportunity to drill in and audit is super important.
Mike, you're on mute.
Sorry about that. Doing construction in my office. So when you think about accuracy and benchmarking, and in that the QAQC example, the way that I would think about it is like there isn't actually a real answer in QAQC, because like there's no such thing as like 100% accurate document set or construction set, or even like what's installed in the field compared to the drawing set. How do you like think through that and just like educate the customer on like, hey, we're going to do 100% quote unquote, whatever that means, benchmarking QAQC. How do you define what success looks like when, there's false positives, there's every kind of combination of things that can happen. Just curious to get your thought process on that.
So the way that we approach this, and maybe I'll give you another example from something we're working on now, which might be helpful. But the way that we approach this is we try to first narrow down the use case. So QC, QA, QC is not one workflow, it's a whole series of processes with different requirements. And you can break that down in different layers, like what are you QA/QCing? So for example, you might start at a very basic level. A typical QA/QC process might be checking the consistency of title block information across thousands of drawings. That's something very achievable, very easy for AI to do. Proven pipelines, high confidence.
But does that even move the needle? That's not saving, and like that's not helping an engineering firm make more money. That's not helping a contractor like reduce COGS.
It's not, but that's like just an example of where AI shines, right? It's really good. but it doesn't have a high ROI. And then on the other end of the spectrum, you have things like compliance, which is a super hard thing to do, but it would have an immense ROI because that's where a lot of the time is spent in cross-referencing drawings against specs, against code, against standards, and so on. So there's a whole spectrum of things that you can do, and some are like low ROI, but they save time, and cumulatively, you might shave off like 50% of a QAQC workflow on the stuff that's high confidence. And then you have all this other really hard stuff that's way more difficult to manage because the assessment of the outputs is much more complicated. And the way that we approach that, at least in sort of document intelligence pipelines, is by providing the initial work that we do with clients is to provide them with the extraction pipeline, the human review interface, and starting with a sample set of documents and the things they want to extract from those documents. We provide them the interface, they upload the documents, and the first cycle that they go through is to basically manually inspect every output for every document through the UI. Every edit they make gets recorded, so we know the edit distance between the generated prediction of the documents of the extraction and what they actually wanted. We understand where AI goes wrong, which fields, which parts of the thing isn't it understanding. And then through that process, they go through the UI, they correct all of the predictions or extractions, and then we get a golden data set. That becomes the baseline for the first initial benchmark for that particular data set and that particular workflow. And from there, doesn't matter how bad it is initially, it could be 50% accurate, doesn't matter. That's just the baseline. And if it's 95% accurate out of the box, awesome. Maybe they can use it straight away and it gives them enough ROI as it is. If it's at 50, 60, 70, whatever, and they need it to be at 90, that's where the work starts to configure and fine tune, train models if necessary, with increasing degrees of effort and complexity.
So how deep, yeah, that's a great lead into like how deep do you guys go? Like, are you going to open source models and changing the weights? Are you doing reinforcement learning? Are you doing prompt engineering? I would love, like, what's your breakdown for a customer? Like if I'm a contractor sitting on the other side of this podcast, like how do you think about it? And how do you say like, hey, like, there's 5% we're training our own models, 95% is prompt engineering. What does that look like for you guys?
So there's very few customers where they have enough of a budget and the ROI calculations make sense to do custom training of models. So of like language models, actual pre-training reinforcement learning. Mm-hmm. That's a thing that you maintain as an enterprise asset for years to come. The investment is not build me a model. The investment is, are you ready to spend $1 million maintaining it every year, right? When it comes to things like computer vision models or sort of off-the-shelf models that you can fine-tune or train with little data, we try to prefer those, so the lowest effort possible. But we start with prompt engineering and orchestration. That's our go-to to begin with the best models possible. And then we work our way down to try and optimize if we have to optimize cost or latency. And if we have to train, we try and sort of that's the last resort. Because once you get into training, then there's all of the maintenance surface for a company to keep that going in the future.
Have you seen any, you obviously don't have to like disclose names or processes, but have you seen any ROI value for someone like, or are you guys helping them train a foundation model, like retrain? I guess not retrain is the right word, but like pre-train a model.
No, pre-train, no. We've done computer vision model training for specific, settings and workflows. And we fine-tuned both vision language models and language models for domain-specific applications, but that doesn't require much effort, and it's pretty quick to manage and redo when you have to. But even fine-tuning a language model that you can create synthetic data sets. It's not hard to do, but there's a lot of effort in maintaining it in the future and keeping it up to date.
The next model comes out and is better than any of the fine tuning that you're able to do, and now you're back to zero, or not back to zero, but
and the other thing is that in this industry, there's very little static data. So fine tuning a model, if you have a product and you've got your own domain and you've collected all that data and you're offering it to other customers, there's an advantage. But if you're a customer, if you're a client, like an enterprise client, there's very few sort of pools of data that you can say, let's take all of this and then spend a bunch of money fine-tuning a custom LLM. And then we don't have to do that anymore for like a long time, right? That data is just going to keep changing and it's going to be obsolete very, very quickly.
I mean, is that just at the like you take all your projects from the last year, you train on all the documents and all the QA issues that came out of it, but like next year you have a different project mix, and so like there are a bunch of implicit assumptions that no longer hold, or could you go into? Yeah.
Yeah, you wouldn't probably not train a language model on project data. You would probably train it on things about the company, like standard operating procedures and domain knowledge, organizational structures and things like that. More about the domain of the company, stuff that doesn't change.
Okay. Can Mike touch on Sorry, I'm running ripshod. When firms are deploying these systems and looking to automate these things, like where is the impact to the business? The classic thing that I've heard, it's been a while since I spent a lot of time inside of A&E firms, is well, they bill hourly, and so if you make them more efficient, they bill less, and so actually it's worse economically for the decision makers. And so I'd love to hear is it top line? Is it bottom line? Is it risk? Where are firms seeing ROI?
At the moment, it's just purely based on efficiency gains. That's the easiest thing to measure because they're starting from the point of view of AI can reduce the number of people and we can do more with less. That's sort of what everyone is thinking. So they measure it in terms of if I needed X number of people to do this thing, if now I can do it with one person and an AI agent, awesome. The hard ROI, I think, to measure, that's like sort of the immediate superficial ROI. But the ROI that's very difficult to measure is the sort of the compounding effects of not building one use case and not buying separate tools, but building them on a platform and getting them to sort of compound off of each other. That's very hard to put into numbers. Like when you start to combine, you do 3 use cases and now you've combined 3 different data sources and knowledge bases and you've got different agents and workflows. And suddenly you can start to ask questions that you could never answer before. What is the ROI of being able to do that? What kinds of insights are you able to now get and how does that impact the business? That's very hard to put a number on.
Something along the same lines, Google yesterday, the day before, released Gemma 4, a 1-byte open source model, not state of the art, but very close. It's made headlines because of how small it is relative to its intelligence. You could run it on your phone. And my CTO sent me a message yesterday saying, look how amazing this is. So I think the trend there suggests that intelligence will be, as some people say, too cheap to meter. It'll be nearly free if it can run on something as ubiquitous as a cell phone. This is a 2-part question. Given that, what should contractors, AEC owners, and professionals do to take advantage of this, let's say, limitless intelligence structurally? A data lake, an AI committee, something. What specifically should they do? And then 2, who do you think is going to benefit the most from this? Small firms, big firms, medium-sized firms? What's your opinion on both of those things?
I think anyone can benefit from this, but in different ways. So I think small and medium firms are going to benefit from things like Cowork and Claude in a very meaningful way if they learn how to use these tools. Like that's the other challenge. It's like nobody's actually using these things, or they're looking to buy products, but without realizing that these tools will pretty much build you whichever product you're trying to buy instead, or will replace it in some way. I think large enterprises can't benefit from the same tools. They can't benefit from sort of generic productivity platforms, and they can't because they're just not suited to the kinds of workflows they need to perform. And they're not going to benefit from buying vertical tools for every workflow they're trying to solve, right? And vertical AI tools, because they're going to stay disconnected. They don't talk to each other anyway. There's already too many SaaS tools in every organization in the world. If anything, the goal of AI should be to reduce the number of products and software licenses a company is using. So I think enterprises that are going to benefit the most are the ones that are doing 2 things. Focusing on the data, So making their data AI readable in whichever way possible. And two is focusing on infrastructure. So building out the piping and foundational infrastructure they need so that they can keep up with the technology as it changes. As models get smaller, they get faster, they're different. RAG is a perfect example. Like the entire world, for nothing but two years, RAG was the answer to absolutely every possible question anyone had. And now it's like, oh yeah, it's super useful in very specific use cases, but you know, there's there's a whole other world to unlock actual useful retrieval and things like that. So I think there's two scales of what you need to do to benefit, and it depends on whether you're a very large enterprise or a very small company or in the middle.
A&E firms going to give all these gains back to owners, or is it going to change the operating profile of the business? So I'm thinking of Revit. Revit came out and it made creating a stack of drawings a lot easier. You needed a lot fewer architect or engineer hours to create some number of drawings. And so there was a very brief period of time where profitability soared, and then the industry figured this out and reconfigured to the point that fees were commensurate with this in some way. People weren't fooled by the stack of drawings. I don't even know that it's a good thing that there were more drawings. I'm not arguing that, but the efficiency got better. But before and after, it's not clear the margins or profitability or stability of the businesses that deployed the efficiency technology were better. What happens with the AI technologies? What are you seeing?
Well, everyone's talking about outcome-based pricing as the next sort of evolution of the industry to be able to compensate or deal with this. I don't know if that's going to happen, because it's not really about architects deciding to move to an outcome-based pricing model. Maybe small companies can do that, but large companies working on large projects, they're obligated by very, very complex contractual structures that go all the way back to government. So unless all of that stuff changes, unless the contractual nature of how the supply chain interacts within AEC changes from the top down, I don't see this having any kind of legs within the industry, like the idea of outcome-based pricing. So I think it will result in what you're saying. There's going to be a period, potentially very long in this industry because it's very slow to adopt. There's going to be a period where people can capitalize on the asymmetry, right? Those that use AI and charge you the same number of hours that people that don't use AI, but they do it in they have 80% margins instead of 2% margins. There'll be a transition period where that's going to happen. I think that'll last a long time, many years, I would assume, just because of how slow the industry. I mean, if you think that there's the majority of the industry doesn't use BIM, and we'd be talking about BIM for 20 years, I think it's going to be the same deal.
Specifically in AI adoption, Guido? Because it seems not to be the case. Every subcontractor and GC, at least from what I'm seeing, is tinkering around with Claude. And I know there's a difference between playing with those tools and meaningfully adopting AI, but it seems like those same curves of the past no longer apply.
At least the on-ramp for adopting Claude and other AI tools,
yes,
is way, way shallower.
Yeah, there's a plethora of on-ramps, and I don't think, it's mostly permissionless because of how cheap these products are. Anthropic is subsidizing these plans. Yes, the compute is basically free. I do really wonder if we can still rely on that old trope, which is construction moves really slowly. A16Z published an article recently, asking for builders to improve the space meaningfully. I know Mike has some opinions on that. I'll pass it over to him, and I think he might have some questions for you.
Let's get Guido's thoughts first, and then I love Guido's thoughts initially, but I think one pushback I would have on the outcome-based pricing, I've definitely outcome-based pricing pilled. I think for architects and engineers, it's hard, and it's always going to be hard because they bill hourly, just like how it's hard for lawyers with Harvey and Legora to be able to charge more for the service they provide now that AI can help them review contracts faster. And the lawyer shift is hey, and I would talk about this a lot, is due diligence took 3 months before we'd charge $1 million in fees to do that. If I do that in 1 month, I'm going to charge you $4 million. That makes a lot of sense in legal because there's a beginning and an end. In AE, that's not the case. You're not going to be I'm not reducing the construction of the building by 90% because I used AI to design the building. So I think that for AE firms, it could be very, very hard for outcomes. I think for contractors, subcontractors, vendors, and suppliers, they will be able to charge for outcomes because they'll be able to do things faster and respond faster and do X, Y, and Z better.
They already large, especially at the
Charge
trade
per
level,
outcome.
they already price
Charge
on
per
outcome.
outcome. Yeah.
That's
So it
the
makes a
whole
lot of sense
thing.
for them to tie to it. It's like, hey, we're going to perform X or Y, and this is our return. For example, we tie to customers' gross margin. If we increase their gross margin, we want a portion of that gross margin as compensation for that. So that's like very like black and white from that position. And I think AI helps with those pieces. Then going to the A16Z piece, my initial gut reaction was it was a bunch of venture capitalists trying to talk about a space they really didn't understand. I think even the definition of like $3 billion of Revit spend, to Guido's point, like that doesn't expand to $30 billion of Revit spend because there's AI now. There's still a $3 billion bucket to replace. But Guido, would love your thoughts and opinions on that. Like the positioning, what you're seeing in the market. I mean, you're very much in the weeds with customers right now. And we just kind of love to get your understanding of what are moving the needle. It was a lot around like, I'm sure you read it, around like design, MEP coordination.
Yeah.
What was your initial thoughts?
So what is this is the most interesting thing to me in this industry. It's everybody's focused on trying to automate the stuff, and this comes back to benchmarking as well, but everybody's trying to automate or solve problems that AI is really, really bad at solving. And because like the industry had like its awakening with ChatGPT, it's like artificial intelligence exists and now we can use it. It's like, yeah, okay, but there's a whole history of artificial intelligence research, and it's been, albeit less accessible, it's been usable for decades. Like simpler models and things that have been solved over and over again in different industries, all of machine learning and statistical analysis. The industry's never touched that stuff. Like we've always kind of stayed away from it. Maybe engineers a little bit through certain mathematical models and simulations and so on. But generally, no one's really tried to use, the AI that is mature. Everybody's trying to chase the bleeding edge, but not understanding that if you do chase the bleeding edge, then you have to be ready to take risks and fail and keep chasing it. But there's this weird thing in this industry that it's like you realize you're at the bleeding edge, but you're still expecting bleeding edge technology to work like a robust piece of technology that's been around for a decade. And there is that technology, but the industry is completely blind to it. And computer vision models are an excellent example of it.
Why do you think that is?
It's just, I think, just general ignorance about technology and AI. You can't ignore it now. It's become part of daily life, social life. So it's like the internet, right? You cannot ignore it. And so as an industry, everybody talks about it, everybody hears about it, reads about it, but they're missing the whole history. They think AI started 3 years ago.
But why is that relevant, Guido? I mean, if it's not usable, sure, there's been computer vision models for a long time, but we could not expect someone in AEC to implement that on a data set and then solve the UI UX problem or solve the accuracy problem. So it seems to me like as I'll call myself, let's say I'll take the position of non-cynical to venture capital dollars. People in construction are aware that they can solve their problems with AI. Firms like us on this call have said, okay, I'll take those dollars and then I'll create an experience where people can benefit from that technology gain. And it becomes ideally a self-reinforcing loop. People pay for those services, the market expands, people invest more money. What's your take? Are you saying that, venture capital is a bit late to the party? Or are you saying, yeah, it is actually a good thing because now people can benefit from those technology gains in a more distributed way?
It's definitely a good thing. I think the industry is late to the party. And it's, there's a lot of problems in this industry that can be solved through workflow automation, without AI, with machine learning, with a lot of different stuff that is way more robust and proven than the latest and greatest technology. I think it's just a mindset thing. You have to understand the context within which you're adopting the technology and where that technology stands on its own development roadmap. And where it is. That's what I'm concerned with is trying to adopt the wrong tool for every single job.
I feel like a number of my recent conversations, we've been poking at some ways some commercial relationships are arranged in the industry. It feels like people are ready to question another level of assumptions in their businesses in a way that they weren't 3 years ago or 5 years ago. And it might be that the technology that you would use to deliver on some new vision or some new way of running something. I mean, Case is a great example. Case, small architecture firm, automated the heck out of interior office fit outs and offered outcome-based pricing to WeWork. They priced per square foot until they got bought. Like, they did it. It worked great. It allowed WeWork to like roll out an incredible amount of office space incredibly quickly. And, you know, Adam Newman to have an interesting life. Like it feels like there is something just to this shift of like, oh, we could do things differently. A willingness to question and engage more substantively than existed a few years ago. So it's interesting to think of that as like the big unlock.
Yeah, and I think that's key. If you try to just bolt on AI to whatever you're already doing, it's not going to work very well, I don't think. Re-engineering processes and reinventing operations around what AI actually offers, I think, is the right approach.
I think that makes sense. So I think one of the reasons that we reached out, or Luigi reached out, was I think you're very prolific at like publishing your receipts, which I love and appreciate. I think it's much needed in the space to drive trust to the industry. There's obviously been some news yesterday. DocuCrunch announced that they were acquired by Trimble. You saw the DataGrid acquisition. Would love to get your overall like thoughts of like AEC startups thriving and dying with this recent wave of M&A activity, because it's going to be interesting. It's like, yeah, we just love to get your. I think you published an article about this or a report about this. Yeah. Would love to unpack that.
Wait,
yeah.
You told. Wait, where were each of us? Like, were we on the die side or on the thrive
I don't think
side?
we were in the. I don't think we were in the report.
Wait, we weren't on the
Even
reports.
Okay, Guido,
this is why we're not TVPN yet. This is why we're not getting open AI.
Say which one of us will die and which one will
Yes.
thrive. Provision, build vision, join, go.
Yeah, so that report sort of highlighted the startups that are made a name for themselves within the AC tech space over the last 5 years, and there's sort of the household names when you think of AEC tech startup. And now, of course, there's a whole new generation with AI and everything. It's like it's completely exploded. But at a time not so long ago, it was literally like a handful of startups. Most of them were focused on pre-construction and feasibility. And that report and article was more focused on how Autodesk and their Forma play, which is now also playing out. Everything is Forma now. It's a brand and it's a Forma platform, and everything is changing names to be more AI focused. And I think the report, and my opinion still stands today, especially with the last week of AI announcements. I think it's the startups that focus on making data AI readable, like AEC specific data AI readable, and the ones that focus on the knowledge layer to enable AI to navigate domain specific knowledge. Anyone that's doing that, and it could be as a platform, it could be a vertical product, it doesn't matter. But I think those are the ingredients of like successful startups in this space now.
So, but I guess like the last two acquisitions in the space have been the opposite of that, been the opposite spectrum. Both DataGrid and DocuCrunch, I would say, are taking unstructured data and structuring it, and are not the knowledge workflows layer. So, like as you think about like the targets of acquisition, so it's Trimble, Procore, Autodesk. Having gone through an Autodesk acquisition, I think the knowledge layer piece that you mentioned is very hard for them. Them plugging in point solutions, plugging in data layers. I would guarantee Autodesk is on the hunt for some sort of data layer AI company right now, AI agent company, however you want to position it. It seems like the market isn't responding that way right now, and be curious to see like how that changes and why you think that changes, really, because I don't see the Procores, Trimbles, or Autodesks of the world saying, we're going to replace Forma. We're going to replace our planned grid acquisition with a new tool. It's going to be these like plug and play. Here's the node connector pieces.
Yeah, we'll see how that plays out. I think as these are all sort of incumbent legacy companies, don't really have a choice. It's not like Autodesk can recreate their entire ecosystem from the ground up around AI. But that would be the ideal situation, right? If we could have what we wanted, then you would have Autodesk become more like Anthropic, right? and then they build the Autodesk ecosystem around the future vision of the industry and what that would be. It's never going to happen, of course.
But I would push back on that, because if you asked how they've structured Forma and why they have Forma, Forma is that. Forma is like, hey, we don't care about the brand point solution anymore. We care about the data infrastructure. We have all the tooling to do that. If I were to take a guess, I would guess that they would buy a company that is saying that they're an LLM for construction and plug it on top of Forma and train on the proprietary data that they have that no other startup can compete against. And that would be the bull case at their 90% margins right now.
Yeah, no, I think they will do that. And I think all of that stuff will work within the confines of their own ecosystem. And that's it.
I just like, the reason I'll push back is like, everyone thinks like they've been crushing their earnings. They continue to get market share. And everyone's like, oh, Autodesk is like this archaic organization. I would push back. Like, they're crushing it. Like, they are one of the fastest growing vertical SaaS companies. They're re-accelerating. I think they have a lot of upside in this world where like workflows get automated away. So any point solution goes to zero, like that we like to talk about. And then Autodesk, Procore become these massive infrastructure layers, one on the construction side, one on the design side. And I feel it's hard for any other tool to wrap around that.
Yeah, I mean, even if that did happen, you would still have the problem of AEC enterprises having to use both those platforms. So even if they get to the point where they have infrastructure...
They do now. They do today, though.
Exactly. And that's the problem.
It's not a problem, though. It's not.
I mean, it is for the clients that we have. Like, the main problem we solve is the fact that they can't manage data and knowledge across different systems. And they have workflows that span 10 departments and 25 different people. And the reason it takes them months to perform that workflow is because of decentralization and how they separate all of that data out and knowledge and expertise. Like, most of the work we do, if we had to generalize, whether it's in generative design or AI or automation, it's really about taking these fragmented processes that span multiple departments and data sources and experts and combining them into something holistic that fewer people can run. Either one person can execute or multiple people can execute together collaboratively in a way that they can, review the outputs and participate in the process.
But is for an AE firm, they're going to centralize back on Autodesk, and for a construction firm, they're going to centralize back on a Procore?
Yeah, but I think that that's fine. I think they'll solve the problem for the firms that can run an entire business on Autodesk. The issue is that all of these platforms solve for domain-specific workflows, but they don't solve for operational workflows. So unless Autodesk becomes a business operations platform, any architecture business, any engineering consultant, it doesn't matter how big or small they are, they're still a business. And all we talk about in this industry when it comes to AI is solving design and solving engineering, when really all of the value today, at least, is in solving business operations.
That's interesting. That's a different opinion. I mean, that would bode well with the traction that teams like Agave are getting, even within the Procore ecosystem, because they are the kind of last mile of connectivity between Procore, Sage, your ERP. I mean, that does make sense. I don't know, though, if that's where all the value is. At least when I talk to teams, it's not like I'm desperately trying to integrate my ERP into this. It's like I'm losing money or I want to win more work. Those things that doesn't conform to your worldview.
I think there's a disconnect between what people want, what clients want, and what they actually need to achieve what they want. The focus is always on the core business workflow. So engineers will ask you to automate their structural calculations and their Tekla models. Architects will ask you to automate their QAQC and check that, all my dimensions are correct in the drawings. But we never, when we speak, we eventually get to this, right? We eventually talk clients up to this, but we never have clients that come to us and tell us, hey, we manage our system really badly. Can you help us improve the way that we search for leads or how we identify opportunities? Can you help us accelerate the way that we do financial modeling and financial estimation up front before it even gets to become a project? Can you help us with setting up like the team performance and task management across the team so that we can track and improve? All this stuff AI is amazing at, but hardly any client ever comes in and asks for AI to do one of those key fundamental business tasks. It's always like drawings and engineering calcs.
Well, it seems like I mean I've been talking a lot, so I'll pass it over to Andrew and Mike. But I don't imagine, let's say before Harvey, lawyers were saying I want to reduce my billable hours. It was once Harvey was part of the system where they created a state of disequilibrium. Okay, now there's game theory. I have to use them to be AI native to sell more product. That people started adopting these tools. There was a lot of uncertainty in the legal market as to whether or not these tools were going to be adopted because of these very obvious incentives. I want to sell more hours because that's how I make my money. So I don't know. It seems like these people who are maybe hiring you, they're not saying, oh, I want to automate my core competency because that's how I sell my hours. But that doesn't mean that that product can't be created and be very successsul. It just needs to proliferate, and it needs to be successful once before people will adopt it. So maybe they're not asking for that just because of their incentives. Do you see that being valid?
I just see there's two sides to it. One is really hard stuff to solve, and that needs a lot of investment. And it will have a high ROI for those that sort of are in it for the long run. But if you're trying to adopt AI and get as much value out of it as quickly as possible, then business operations is where you're going to get the most value. It's, and software engineering, that's where it's proven. That's where all of these tools have ended up in: marketing, HR, and software engineering, and customer support. If you can map those problems to domain-specific use cases in AEC. So for example, customer support in AEC is field data collection. It's site inspections. That's customer support, right? You got someone walking around taking pictures of defects. It's the same as customers reporting bugs in a software system. It's the same thing. Or like a customer leaving a 1-star review in a shitty restaurant. It's exactly the same as a worker on site, leaving a complaint about a safety hazard they discovered on level 3. So if you start mapping in that way, like look at where AI has had the most impact outside of the AEC industry and map that back to the same sort of problems that we have in a more domain-specific way, I think that's how you really start to extract value from AI. And yes, I believe that eventually we're going to have more automated design, more automated engineering, better compliance checks, more digitized workflows. Of course, we'll get there. But it's a question of like a really long strategy and high investment roadmap versus quick wins in proven territories.
Okay, I have a question to turn it back. What counts as thriving for an AEC startup?
What counts as thriving? That's a good question. Like an AI startup or like any AEC startup?
Any AEC startup. Did AEC Foundry raise venture money?
No.
Okay, good for you. Mike, you did. Luigi, you did, right? Join did, right? I may have told you guys this story way back when we had a meeting with Sequoia. We pitched Doug Leone, who is the PlanGrid investor, right? And he's the managing partner at Sequoia. He's like the god of venture capital. And maybe he was just politely finding a way to pass on us because he didn't like the way we smelled or whatever, which is fine. But it's like drilled into my brain. He's like, construction, PlanGrid. I mean, we were in that for like 5 years. I exited for $800 million. It's okay. Don't get me wrong. But the whole the two thriving startups in AEC technology are in the last 15 years are arguably Procore and Equipment Share because they IPO'd. And everything short of that is not.
If you're an investor, you would think that.
Yeah, that's true. Oh, but I mean, it's also like it. I feel like it speaks to the scale of the challenge. Mike, Building Connected is a beloved product. Like all of our customers use it and are never going to move away from it until Autodesk scratches the price up too high. The model of like you build these things and they get bought by these big public companies and then like rolled out with a larger sales force has not moved the needle on like industry outcome. Like it hasn't worked. It's been great for the employees and owners of a number of these companies, but I just don't know that we have a lot of examples of truly thriving. Like
Yeah, if you base it on impact, then I would have to agree with you. The biggest companies in this space are arguably some of the worst products that I've ever seen personally, just in terms of like basic product design and user experience, simple standard stuff that you would expect to be of a higher quality. But thriving in the sense, I mean, in the AI space, one company that I love to bring up all the time is Nplan. And I think, in this space, they, in my opinion, are arguably one of the only, if not the only, true AI startup or AI company in AEC. Just for the fact that they've done it and they've built it from research, from scientific research, all the way up to a product and a platform, maintaining a research lab, and they do it properly. Like if there's one company to pay attention to in terms of if you want to be a real AI company in this space, that is a really, really good one to look at, as opposed to like an AI-enabled product, like a true AI company. So, I mean, thriving in that sense, they haven't IPO'd. They certainly don't have the same stature, but, they got their 100+ millions of funding, so they're doing amazing work.
The Nplan guys they're very smart, and they have a proprietary data set.
They do, which I don't honestly know how much that's worth anymore in this day
Well,
and age.
I was gonna say, I mean, like, what's a real AI company these days, and does it really matter? Because it really is just about the output, right? Like, if you can contort an LLM to perform magic, it doesn't matter if you're a rapper.
I know, no, I have nothing against rappers. I think rappers are essential
for
because,
sure.
it's user experience. If you can't make the technology usable, then it's useless.
It's really like the whole thing is kind of a false dichotomy, right? It doesn't matter. There is value as long as the customers can experience value. But I really do believe that the best solutions here will be meticulous about their benchmarking and how they'll be improving. I think we do this quite well within Provision. We don't do a great job of marketing this, but everything has a benchmark. And then, yeah, after a certain point, like if you want to increase your margin, you go build your own models or you distill a model. You can't do that, but you take steps once you have that data to give the best outcome to the customer, being it reducing costs or giving some magical experience.
Well, here's a question. Do you think that Document Crunch had benchmarks and that's what they sold to Trim?
Do they have benchmarks? Well, I never saw. So I'll say this. I have a horse in the race. We compete with Document Crunch on contract review. I don't believe contract review is an enduring business. It's just too ubiquitous. Did they have a benchmark? I would imagine they did. I think the history of Document Crunch, at least from what I understand it, is they started before LLMs and they worked with a third party to build a proprietary data set. I'm struggling to remember the name, but they were a classifier. Like they built a classifier and their neural net would say, this is an LD, this is a warranty, et cetera, et cetera, et cetera. Now, I don't know if that product was very successful. That was an old product. But they must have had some benchmarks. Any company that is using LLMs worth its salt has to know that if I'm putting this out, it's better. To a degree. If you want product velocity and you just know like, hey, I can plug in this open source model, Moonshot AI or Minimax, and give it the right harness, our customers need to experience that and we'll do the evals later. But I think it depends on the workflow. In their workflow, where you're sitting across the table from a business owner who has their life on the line, I think they had benchmarks. I don't think that's why Trimble purchased them, though. It wasn't for the benchmarks.
No, of course.
Andrew, Mike, what do you guys think?
That if DocuCrunch had benchmarks or what they got bought by? What was the question?
Why do you think they purchased them? Well, the question I think from Guido was like, did they have benchmarks? But I think maybe the question behind the question is why were they purchased?
They were purchased. This is their AI play. It's like a pretty like, hey, we have a bunch of data structuring. Can we use the pipeline that DocuCrunch has created to do extraction to supercharge the rest of our workflows? They didn't get a stock bump from the acquisition news.
Say it again.
They did not get a stock bump. It was trading under after hours, after announcements. But it needs to be. I know Trimble's interesting because Trimble has like 9,000. That's over exaggeration, but like 9,000 different like product lines, and they have GMs of the product lines. Where like the Autodesk Procore is more of like full businesses around these. So I think it's interesting. Like this is gonna be like their Did they change?
Yeah, I think that they've been like since Rob Painter came in, it's like there's quite a lot of interesting change that's happened inside of Trimble over the last like 3 years. But yeah, go
So
ahead.
it's like the structure, like the structure acquisition now is like the materials kind of business unit. Again, that's and it's more of like acquisitions. So be curious to see how that plays out. But I think this would be their intelligence play. Makes a lot of sense for them. Go bolt this on to every customer that they have. Charge them $10,000, $100,000 a year. Say, hey, here's your AI play. It's construction specific. It's not Copilot from Microsoft. I think it's interesting. I think it was a great opportunity for exit. I've heard that they've been going up against Harvey and Lagora, which I couldn't imagine competing against companies that have raised hundreds of millions of dollars and have gone from $1 to $100 million in revenue in 18 months. Just talent of acquisitions of employees is a challenge in that world. So it's a tough one. It's a tough position. I think Josh is great. I think I'm super excited for them. Seemed like a great opportunity. And yeah, I'm super excited they were able to go down that path.
Great note to end on.
Absolutely. Guido,
Thank you.
Thank
very
you, guys.
grateful for your time. Thanks for joining us on this beautiful day in Rome. This won't be the last time we have you on, but hopefully you had some fun as well.
Yeah, it was totally fun. Let's do it again sometime.
Okay, I'll end the stream now.